Is gold investing actually a good strategy during times of inflation? And could we see $30,000 an ounce? Or maybe the government is just going to seize everyone's gold again. So to start off, the price of gold in Venezuela today, this is a country that's been decimated by hyperinflation, is over 400 trillion Bolivars per ounce. So if you flew to Venezuela today with a single 1 ounce gold coin, you could become a Venezuelan trillionaire by morning. So the point being that measuring gold against paper currency is a moot point, especially during periods of hyperinflation. If bread is $1,000 a loaf, does it really matter if gold is $30,000? So looking at it that way, of course, gold, it could reach 5,000, 10,000, 50,000, 50 million an ounce, but it would likely do so only as a result of hyperinflation. Now, if we ever experience hyperinflation, which is somewhat unlikely, but it's a possible scenario, gold could reach $1 trillion, but dollars aren't going to be worth anything. Now, there's a popular saying that says 1 ounce of gold, regardless of the surrounding currency, can always buy you a nice suit based on the value of the money at the time. But what about regular inflation? Most people hear the talking heads online promoting how gold investing is a great hedge against inflation, and they just accept it as gospel. Now, this is a very sophomoric view of inflation and of gold altogether. Let me ask you this. Will sandbags protect you against a flood? Right? That question is impossible to answer without context. How big is the flood? How much water? How high are the sandbags? You need more data to give you an appropriate answer. So will gold protect you against inflation? You need more data. So in reality, if we look at the statistics, gold has not been a great hedge for low and stable inflation. 1973 to 1979, annual inflation averaged around 8.8%, at times double digits. Gold was a decent hedge. It returned investors around 35%. But 1980 to 84, annual inflation about 6.5%. Gold investors lost 10% on average. In 1988 to 1991, inflation at 4.6%. Gold saw a negative 4.6 return. So gold is not always a good inflation hedge, as we can see with these charts. So where gold really shines is in times of very high and accelerating inflation, not low and stable inflation, which we may very well be seeing in the near future if things are not put under control. Now, this is something that many people don't understand. There's different flavors of inflation. Another popular misperception is that currency debasement or money printing, quantitative easing, they don't know this doesn't in and of itself destroy currencies and lead to hyperinflation. We're $30 trillion in debt right now, much more if you count the obligations, and the dollar is still very strong. What destroys currency is when people's confidence in it falters. At that point, it's all over, and people are going to very likely flock into gold. So the argument for the dollar at this point is the USA is the most powerful nation in the world, and the US dollar is the world's reserve currency. But already we see Putin and other countries trying to chip away at that position, even considering accepting Bitcoin or gold for oil. Russia has already pegged the ruble back to gold, which hasn't been done in any country since the 1970s. This could be very bullish for both Bitcoin and for gold. And we have this misperception that currency in our hand is valuable, but the actual value of paper currency is just the paper. And not that long ago, currency represented a certain amount of gold holdings. There's been some discussions of pinning the dollar back to something like gold. And today, if we were to actually bring money back onto the gold standard, an ounce of gold would immediately be worth over $30,000 an ounce. And that really gives you some idea of the loss of value of the dollar since it started back at $35 an ounce for gold. So it certainly is prudent to hold some gold in the event of financial cataclysm. We live in crazy times, as you can see if you look around. And Bitcoin, right now we're seeing people fleeing Ukraine and they've got USB disks with their Bitcoin on it. Commerce in Venezuelan hyperinflation, that involved a large amount of transactions in crypto. It's not an either or situation for gold or for Bitcoin. And just think, if governments start transacting oil in cryptocurrencies, what is that going to do to the price? Now, a huge consideration with gold that most people don't even look at is that governments have consistently and frequently confiscated it over the ages. 1933 in the USA, gold was illegal to own right up until 1975, not that long ago. 1959 to 1976, the Australian government, they made it legal to seize gold from its citizens and exchanged it for paper money. 1966, Britain banned all of their citizens from owning more than 4 gold coins, and that law lasted until 1979, again, not that long ago. In 1935, Benito Mussolini had a very bad recession on his hands in his country. He asked citizens to donate their gold jewelry in exchange for a little steel bracelet that translated from Italian stated gold for the fatherland. Now, women were so filled with this patriotic fervor, many of them gave away their wedding rings. And Mussolini, all told, took in about 35 tons of gold. Now, if you wonder how many people could be deceived by a fascist dictator at the time, it seems like the right thing to do. Very much like today. But could all this happen again? Well, nobody thinks it could ever happen again. But make no mistake, if the government perceives a significant threat to their currency, particularly the world's reserve currency, they are absolutely going to seize your gold, and they're going to use propaganda to make it appear that you are not a patriot if you do not volunteer the gold yourself. So, is gold investing good in times of inflation? It depends. Firstly, on how bad inflation gets, and secondly, how desperate the government eventually becomes. Has silver been a good hedge in recessions? It's a great question. I'll place the link above for that. Thanks for watching.